What is going on, everyone, and welcome back to Explain the Charts. Today is Monday, October 20th, 2025, and we are taking a deep dive into Amazon, ticker symbol Amazon, which is facing some serious headwinds right as the week begins. The biggest story is a major Amazon Web Services, or AWS, outage in the U.S. East, one region that happened early this morning. This has disrupted huge platforms like Snapchat, Robinhood, and even Amazon's own services, causing widespread issues. Despite this, analysts are noting the stock's initial pre-market reaction seems somewhat muted, currently trading around $212.27 after closing at $213.04 on Friday. This news is compounded by reports of another round of tech layoffs at the company, which adds to a bearish narrative. However, it's not all negative. Amazon has been making significant positive strides as well. They're expanding their One Medical services, launching new pharmacy kiosks, and just announced a new private label grocery brand to capture more market share. Furthermore, major partnerships with the NBA for cloud services and FanDuel for sports betting integration show strong growth in other high-margin sectors. This creates a very mixed picture for investors, so let's turn to the charts to see what the price action is telling us. Starting here on the daily chart, we can see the broader context for Amazon's stock over the past year and a half. The stock saw a powerful rally into early 2025, reaching its 52-week high of $242.52 in February. Following that peak, we saw a sharp correction through March and April, where the price found a significant bottom at the 52-week low of $161.38. That April low represents a critical long-term support level for the stock. Since then, Amazon has staged an impressive recovery, climbing steadily through the summer months. However, the upward momentum began to slow down as it entered the fall. Notice the significant gap down on August 1st, where the price fell sharply from over $230. This established a new trading environment, and the stock has struggled to regain those highs since. Let's zoom in on the price action since that August drop to get a clearer picture of the current battleground. For several weeks, the stock established a solid support base right around the $220 mark. This level was tested multiple times in August and September and held strong, acting as a floor for the price. However, in late September, we saw a decisive break below this $220 support. Since that breakdown, the $220 level has reversed its role and is now acting as a key short to mid-term resistance. The price tested it from below in early October and was rejected, confirming this new resistance. Currently, the stock is trading in a range between this $220 resistance and a new support area that has formed around $211 to $212. This is the critical zone we are in right now, and the AWS outage news puts this support to an immediate and crucial test. Now, switching over to the 1-hour chart, this is data from late September into early October. While this is from a few weeks ago, it's useful because it shows us exactly how the stock behaved the last time it was in this contentious $218 to $222 price zone. We can see a lot of choppy, back-and-forth action, indicating significant indecision from both bulls and bears. This price behavior highlights how important this area is as a pivot point for market sentiment. The failure to hold above $220 on this time frame preceded the larger drop we saw on the daily chart. This historical context reinforces the idea that reclaiming the $220 level is a major hurdle for the bulls. To understand the immediate pressure on the stock, let's drill down to the 15-minute chart from last Friday, October 17th. What we see here is a clear story of weakness into the weekend. The stock attempted a small rally in the afternoon but was quickly rejected around the $214.50 level. From there, sellers took control, pushing the price down steadily into the market close. The stock closed near its lows for the session at $213.04, which is a bearish signal in itself. This pre-existing weakness is now meeting the negative AWS outage headlines this morning. The pre-market quote of $212.27 suggests a gap down at the open, immediately challenging Friday's low. The key levels to watch on this time frame are the intraday lows from Friday around $212.50 and the more significant daily support near $211. Bringing it all together back on the daily chart, we have two primary scenarios playing out. The bullish case hinges on the market treating the AWS outage as a temporary, non-critical issue and focusing on Amazon's diversified strength. For this to happen, buyers must defend the support zone between $211 and $212 at the market open. If this support holds, we could see a bounce, but the first major test would be reclaiming the $220 resistance level. A successful move above $220, especially on high volume, would be very constructive for bulls, potentially targeting the $230s again. The upcoming earnings report on October 30th is the ultimate catalyst that could fuel this bullish reversal. Conversely, the bearish scenario is that the combination of the outage, layoffs, and existing technical weakness triggers a wave of selling. A break below $211 on the open would be a significant bearish confirmation. This would open the door for a move down to the psychological support level at $200. If market-wide sentiment is also negative, this breakdown could happen quickly and decisively. A disappointing earnings report at the end of the month would likely accelerate any downward trend. So, to recap the most important things to watch for Amazon. Your key overhead resistance is the $220 level. The bulls are not in control until that is reclaimed. Your make or break support is the $211 to $212 zone. A failure to hold here is a major red flag for the short term. Below that, the next significant levels are the psychological $200 mark and the April low of $161.38. My unbiased prediction is that we will see volatility and a test of the $211 support level this morning. I'd give it a 60% chance that the support holds, given that analysts have initially downplayed the financial impact of the outage. However, if we see heavy selling volume on the open and a break below $211, the bearish case becomes much more likely. The most critical upcoming event is the Q3 earnings call scheduled for October 30th, which will provide fundamental clarity and will likely determine the stock's direction for the rest of the year. Watch the price action at the market open today very closely, as it will set the tone for the entire week. Please remember, this is for informational purposes only and is not financial advice. You should always conduct your own research and make investment decisions based on your own analysis and risk tolerance. Thank you for watching Explain the Charts. Don't forget to like this video and subscribe for more in-depth analysis.